So hello, everybody. I'm here with the man, the legend himself, Mr. Tony Battista. Tony, thanks a lot for finding some time to be here with us today. I'm really honored to have you here on my YouTube channel. And how you doing today, my friend?
Doing all right. We got our first, almost freezing in Chicago weather. I know you guys aren't used to that, but today's our first 30-ish degree weather, so we're dealing with that.
Yeah. Well, at least your short puts on SPY are out of the money now, right? After today. Today the market went up a lot.
Today the market was good. Now listen, bulls and bears made money today. For those who are watching this, I mean, the market made a new low. Even the S&Ps were around 3,500. That's down 30 some odd percent for the year, just about. And we bounced off of that. And we rallied about 150, almost 200 points off of that. So today was a good, I think, short-term low, but we'll see what the market brings. Remember, nobody knows anything, man, about future price. So it's all about the strategies that you use.
Exactly. Yeah, right. I agree with you 100% in that, Tony. So Tony, you trade options for a long time, right?
1983.
1983, yeah.
Long before you were born.
No way. I was born in 1980.
Oh, okay.
1980. Yeah.
2 years after you were born. Yeah.
But how was it? You were in the pitch, right? In the floor in the CBOE.
That's correct. So
yeah. How was those days, Tony? Tell us a little bit about that.
So I was a market maker. A market maker is in the 80s, at least. It's a lot different now, but in the 80s, I was an independent market maker, so I only traded my own money. I wasn't a broker. You couldn't call me to execute your order. I was literally the they. When you would want to make a trade, you would call your broker would call the CBOE, your representative from the CBOE's broker would go into the pit, and then he would yell out what he wanted to do, and I would create the trade. I was the last stop. It started and ended with me and other people just like me. I mean, the pit had, 300, 400, 500 guys and gals in it at one time, screaming out orders, kind of like what you would see in the old movies, people yelling and screaming.
Yeah. I saw that interview where you were showing the hand signals you used to do. Sure. How was that?
I'll teach everybody. It's really easy. Now, nobody uses them anymore, but back in the day, it was just your chin was one. So if you were buying, you kept your hand in. And if you were selling, you kept your hand out. So if I'm buying 1, 2, 3, 4, 5, 6, you went sideways. 7, 8, 9, and 10 was the far head. So 10, 20. So if I wanted to do 23, it was 23. That would be buying. If I was selling 23, you'd go 23. I'm selling 23 options.
Those
now you would do that across the pit. There'd be everything was yelling. Somebody else is yelling to somebody over here, and somebody's yelling to somebody else over here, and somebody's just yelling to nobody. It was quite chaotic, but it worked, man. It worked.
Yeah. No. Those must be some crazy days. It
was all honor.
Yeah.
All honor. Nothing else.
And the CBOE is huge, right?
Well, it still is the largest options exchange in the world. That and the ICE are kind of 1 and 2 right now.
Yeah. And how you met Tom? And Tom used to be a broker there too.
No, Tom was a market maker just like me. He was an independent market maker. He traded his own money, which means we didn't have any customers. So if I made money that day, I got to keep it. If I lost money, I had to give it to the clearinghouse. Was what it was called. We actually met on a baseball diamond. We were softball. I don't know, do you have softball in Brazil? Kind of it's like a larger baseball.
Yeah. It exists here, but not very popular. No.
Well, it was popular back then for us here in Chicago, and we played it. We were on the same team together, and we just became friends. And we've been. I mean, my son who works for me at Tastytrade, Nick Battista. He's 32 years old. Tom was at his first birthday party, so we've been friends for a long time.
Yeah, great, man. He seems like a great guy.
He's very, it used to be where, like they used to say, if a guy was an asshole, can I say asshole?
Yeah, no problem.
Okay, if a guy was an asshole on the floor, he could be a nice guy off the floor. Meaning, if he was an asshole at the CBOE, he could be a nice guy outside the exchange. That wasn't true. When money's on the line and it's real emotions, if you're an asshole, you're an asshole. No matter where you are. And Tom and many people down there, he was just a kind-hearted, good person. Hey, he wanted to make $1 first, but he wanted you to make $1 too. There was no hard feelings. This wasn't personal; it was just business.
Yeah. No, yeah, that's true. I agree with you, man. If you do somebody who is an asshole, a guy that's a pain in the ass, is gonna be like that when it comes to money, when it comes to politics, sports, and everything, right?
Exactly, man. Exactly. And when money's on the line, it's true. It's your true feelings. You know what I mean? Like you can talk about politics and maybe have the same opinion as somebody else because you don't want to argue or whatever. But when it comes down to money coming out of your pocket, it's your true feelings, and it really showed a lot of character flaws in people, not in Tom and not a lot of other my friends.
Yeah, that's true. So Tony, let's talk a little bit about how you trade, man. How you like to trade. You're more of like an everyday trader. You throw trades every day. You do every day. You go say, I'm gonna do a trade today, or you just say, oh, okay, I'm gonna do and then particular day of the month. I like to do 45 days to expiration, or you just throw trades every day. How is your style in trading?
Sure. So it's evolved. It's changed. From 1983 to 2005, I was a market maker on the floor of the exchange, as we just talked about briefly. Completely different market. I was taking the other side of everything that somebody wanted to do. Meaning that if an order came into the pit, you wanted to sell, meaning the customer wanted to sell, I would buy. If the customer wanted to buy, I would sell. After 2005, I became an independent trader, just like yourself and your audience. I don't have any special treatment than anybody else. My margin is the same as everybody else. When I was a market maker, I might trade 3,000, 4,000 contracts a day, trying to make a small amount of money in between each one of those contracts. Today, I might trade, 50, 100 contracts, 150 contracts on a busy day. Completely different style. As an independent market maker, it was trying to make a small amount of money, a lot of times a day. And as a retail investor, I'm kind of putting on more of a position. I'm also I'm initiating trades, meaning I'm making my own trades, not doing the opposite of what somebody else wants to do. So it's changed, and you have to have some sort of guidelines. I don't like to risk more than 1 to 3% of my net liquidity, how much money I have in my account.
On one trade.
In any one trade, correct. So I trade a lot smaller. As a market maker, I might have 200-300 times my risk in the account I had. So if I had, just use round numbers, if I had $100,000 account, I might have $300,000 worth of risk. I would never do that now as a retail investor, as all the people that are watching this and yourself and me. So I'm trying to trade small. I'm trying to trade a little bit more often. I like putting on trades around 45 days. I like trading the monthly options. That might seem a little weird because we actually created the weekly options. I don't know if a lot of people know that, like Tom Sosnoff and a lot of the team were instrumental in creating the weekly options, which have become very, very popular with retail investors and everybody around the world. We actually called them the quickies. It was like a short-term, almost daily expiration, which is what you have today. I just think it's good for instant gratification, when you're right, and instant pain when you're wrong. And I think for most retail investors, you have to have a longer time frame, and that time frame is around a month. That 45-day time frame seems to be the best risk reward to mitigate, to make these daily moves a little bit less in your account. So you build a wall one brick at a time instead of many bricks in a big wall today, and then you take a lot of it down. You try to build it a little bit slower. So for now, as a retail investor, I'm looking for high implied volatility. I like selling premium. I believe in the math model. Every trade I make, I try to have a 65% pop or better. Pop is just probability of profit. 65% because that's a math bell curve. If you go to any mathematician, and if they want to say something like, if you don't want something to happen, what would you want that probability to be? They'd say around 68%. That's one standard deviation. I like to be outside that one standard deviation and let the market beat me. If I'm bullish or bearish, it doesn't matter. I just want the market to beat me.
Okay. So you go more like if you throw a strangle, you look for one standard deviation, a 16 delta put, 16 delta short call, or you're more like 25 delta. What kind of deltas you go for, Tony, when you're throwing this kind of trade?
Anywhere between, I'll give you a wide range and then I'll tighten it up. Anywhere between 30 and 12 delta, depending on the price of the stock. A higher price stock, you can usually go a little further away and still collect enough premium for the amount of money that you're using. And a smaller price stock, you got to go a little bit closer and take a smaller profit a little bit quicker. So anywhere between 30 and 12 delta. If you had to give me my sweet spot, I'd say around 22 deltas.
Yeah.
There's no wrong answer when you're selling premium. I think a lot of people as retail investors get a little bit worried about going closer to the money because their probability of success goes a little bit tighter.
Yeah.
But you're not holding it to expiration. You're not holding it 45 days. There's nothing wrong with taking a trade off 5, 10 days, 15 days after you make it. If you sell a one standard deviation, 15 delta strangle on both sides for $3, and you're trying to make $1.50, and it takes you 3 weeks to do that. Let's make a perfect scenario. 3 weeks, you make your $1.50. If you go a little closer to a 30 delta, and you sell that strangle for $6 or $7, and you try to make that same $1.50. Don't try to make $3.50. Don't try to make 50% on that. Make less. Make that $1.50 that you were trying to make. You'll find out that you'll have a lot more opportunities to take winners, take that money off the table, and then go and do something else with it.
Yeah, that's golden information, Tony. That's true. And people,
I think sometimes it's emotional. Like I'm not a philosophical trader. Like I don't get too emotional about anything. But people who kind of take everything as personal, like every trade they make is like, oh, the market maker, which there are no more market makers like me anymore. It's all computers and servers. Yeah. The market maker tried to screw me. Like they don't care about your 1 or 2 contracts. You're more of a nuisance than anything else. Like they want the market to be wider. If you're a public order, your order has to be shown. So the real market might be this wide, but because there's all these public orders, the market's this wide. I'd much rather, if I'm taking the other side, have a wide market than have a tight market. And I'm going to tell you one thing, and I want your audience to think about this for a minute. As an ex-market maker, somebody who traded against every public order that ever came to the floor, think about this for a moment. Because they always say market makers are evil or bad people. They want to screw you over on your trade. Think about this for a second. If you owned a business and your business relied on somebody coming back every day to do business with your business, like that was the only way you could make money, was if they came back to your store to buy or trade or do something in your business. Every trade that came to the CBOE that traded with me, I wanted them to be successful. Because the only way they're going to come back and give me business is if they made money. If they came to my store and I ripped them off 1 time, 2 times, 10 times, they never come back.
Yeah.
If they never come back, I'm sitting in my store with no business, nothing to do. So as a market maker trading against public orders, I wanted every one of you to be successful. Now, I wanted you to make $1. I wanted to make $5.
Yeah.
You know, that's all it came down to. So there's no true ripping off of the customer on the trade, because you'll go trade Bitcoin, or you'll go trade gym shoes, sneakers, or you'll go trade NFTs.
Open a business, do something else. Yeah.
Absolutely. So everything you did, I wanted you to be successful on. So it was always a fair price on entry.
Yeah, yeah, and that's a big misconcept from people here, because in Brazil the liquidity is small. No.
Okay, now hold on. Brazil, India, you know, there's a lot of foreign markets, and that's why the U.S. has the best markets for trading. It's just so big, it's so liquid. Markets are so tight. Your order gets filled in nanoseconds.
Exactly.
Works. You know, it's there's no like you think Citadel or somebody is trying to rip you off of your 1, 2, 3, or 4 contracts, that 50 contracts that you're trying to do. It's thousands up. You know what I mean? Between the
Citadel moves the whole market up or down when they're neutralizing the deltas, right? Yeah.
The only thing that customers do wrong, in my opinion, is they don't learn about strategies. And it's all about strategies. If you keep it simple, it's the only business that if you keep it simple, you probably won't be successful. Like, you have to trade, in my opinion, you have to trade spreads. You got to give yourself time to be right. You got to give yourself a horizon, whether it be a week, 2, or 3. I like 3 weeks. You might like 1 week. The guy around the corner or the lady around the corner might like 6 weeks. It doesn't matter. It's just very hard to guess what's going to happen tomorrow. It's very hard to guess what's going to happen the next day. And plus, most people trade too big.
Yes. That's exactly.
If you trade small, Davi, I mean, how many times? Well, I don't know what would be a good example of something. I mean, how many times have you done something when you started to trade and it goes against you immediately? I mean, it's over 50% of the time. It's over 50% of the time for me. Like, you know, you do something, you're down $5 on it. You know, if you did 1,000 of them, or 100 of them, or 10 of them, you know, you're down $50 or $100. Could be a lot for a lot of people. But if you did one of them, you're down $5 or $10. You know, you can stay in that trade a lot longer and give yourself time to be right. And that's what most retail investors miss. They want to get rich tomorrow, and tomorrow might be a month or 2 months away. Yeah.
That's the biggest problem that I see on the people who trade selling premium, right? They just go too big, man. They go
too big.
They just sell too much. And one thing.
Well, it looks so good, Davi. You know what I mean? Like, you know, a stock's 100. How can it get to 120 in 2 weeks? Or how can it get to 80 in 2 weeks? All of a sudden it's 85, or all of a sudden it's 115, and you know you're out 3 times what you sold that for. You're forced to close it because you can't afford to take any more losses. But if you were significantly smaller on entry, you might even add to that position at that time instead of closing the position for a loss.
Exactly. And what I see is, if you have enough buying power left, you can always throw another trade that has a higher probability of profit and use that credit to get yourself out of the mess, right? I don't know if you do that.
Let's see how we would do it. I'll tell you how I would do it, and then you and your audience can think about it. You put a trade on, you're bullish on a stock, and the stock's 100, and you sell the 95 puts. You know, the stock has a $10 expected move. So it can go down to 90. It could go up to 110. The stock's 100. You sell the 95 puts. You sell it for $2, $3. Let's make a bad case. The stock goes down $4 or $5 in the next week. The stock's $95. What most people will do is they'll sell another 95 put, or if they're sophisticated, they might sell the 90 put. But what are they doing? They're actually adding long delta. When you sell a 95 put, you want the stock to go higher. You sell a 90 put, you want the stock to go higher. You had, when you put on the trade, 30 deltas. When the stock went lower, you had 50 or 60 deltas. Now you're adding another 30 deltas. You have 90 or 100 deltas. You doubled the size of your trade in the same direction. What I would like to do, if I sold the 95 put and the stock went lower to 95 or 96 or 94, yes, I'm still bullish on the stock. I might actually like it a lot more. I'd rather sell the 90 put and the 105 call. Yeah. Like, it doesn't cost me any more buying power to sell just the 90 put and not do the 05 call, but I sell both. Now what I do, instead of just selling 30 deltas or 30 long deltas, I'm only doing 15 long deltas. So I cut that position in half. So am I doubling up on the trade? It's kind of like kissing your sister. You know, I'm doing the same thing, but I'm not doing it with the same emotion. You know what I mean?
I like to do that too. I don't know exactly like that, but I do some management techniques using the calls, and I try not to adding any more bullish deltas on a trade, you know, or at least not enough. But the big takeaway here is that you're increasing your probability of profit, right? Because that's the good thing. You want to increase your pop. If you have enough buying power, you can't keep increasing the pop.
Right, but you still got to keep that 1 to 3% in line.
Yeah.
So if you were big on entry, when the stock goes lower, you know, you're kind of screwed. You probably should go someplace else or do something with no delta to it, something that's delta neutral if the IV rank is high.
Yeah. You look at the IV rank on trade entry is the biggest thing. You say that's what I'm gonna look. High IV rank, okay, I'm gonna do this trade.
Well, I'm a contrarian by heart, meaning you know, if a stock is lower, I typically like to be bullish. If a stock is higher, I typically like to be bearish, especially if it's moved a lot in a small period of time. But yes, to answer your question, IV rank for selling premium. Remember what IV rank is? IV rank is just like it's like saying, like, let's say I can run a mile in 10 minutes. That's my average. Well, I could do it in 11 minutes if I'm slow that day or there's a lot of wind. I could do it in 9 minutes if the wind is in my back and I'm feeling strong. But I'm going to be wrapped around that 9, 10, 11, mostly 10. When IV rank is high, what it's saying is I've been running 9-minute miles all the time, and maybe even an 8-minute mile. Now, what's the chances of me running a 7-minute mile? Well, it's a lot less because I've been doing so well for so long. It's got to come back to the mean. It's got to come back to the average. And that's what IV rank is saying. It's just measuring how much a stock is moving in a short period of time. So when I'll look at IVX 5-day change on Tastyworks. It's IVX 5D. And it just shows me over the last 5 days how volatility has been behaving in that one stock. So if the volatility is up 2, 3, 5, 10% in the last 5 days, but the market volatility is flat, well, I look at that as an opportunity. It's not an edge, but I look at it as a setup. Well, this stock's been running a lot of 7 and 8-minute miles, and it usually runs a 10-minute mile. I'm going to bet it doesn't run another 7, 8-minute mile. That's all I'm doing.
That's a great example, Tony. That's a great example. You're a legend, man. I gotta tell you that. That's fantastic, Tony.
Well, my wife and kids might say something different, but sure, I'll take it.
Yeah, we people don't used to look at Ivy rank here in Brazil. They don't even we didn't even had a platform showing Ivy rank here to the audience.
Right.
Recently, we had some platforms here that are showing Ivy rank. You don't have a broker like Tastyworks here, so yeah, that's a work
That's
we.
unfortunate. Well,
Yeah,
hopefully someday we'll get there. They'll open up the legislation, make it a little bit laxed. And I mean, right now you have to have a U.S. bank account would be the only way that you could open up an account at Tastyworks presently. Hopefully someday that'll change.
yeah. No, oh, I trade a lot at Tasteworks. I have now
Mhm.
most of my capital is in the US now. Since I'm a fund manager here and I can't trade because of compliance reasons, I can't trade on my own account here in Brazil. So I have to move my money to the US, and was way easier to do it. But
Which is when you think about it, which is, I know that's the rule, and I used to be registered too. I'm not registered anymore, but think about it. If I was giving you money, I would want you to be in it too.
yeah,
Like, if
exactly.
AV stock is so great, you're telling me about it. How much money you got in it? You say, oh, I got, 2% of my net wealth in it. Shit, man, then I want in too. If you say, oh, I don't got any in it, I'm like, well, what makes it so great for me? You know what I mean?
Yeah.
It's I know the rule is there to protect the customer from thieves, but I gotta go with the premise, the idea that you're not a thief. If you're a thief, then what am I doing with you anyway? You know what I mean? So it's rough. It's the same thing. We have a patent day trading rule here in the US. If your account is under $25,000, you can't do certain trades that I could do if my account is over $25,000. Now, it was put in place to protect the small investor. But just because I have an account with $10,000 in it, I might be worth $50 million.
Exactly, yeah.
You know what I mean? But my account is $10,000. I mean, I don't want to drive a Lamborghini. I want to drive a Chevy. But I'm still worth, $50 million. You're worth, $1,000. You know what I mean? So it's the rules are there to protect the customers, but sometimes they just don't work properly.
Yeah, just good intent. They make the rules with good intentions, but they don't work, right? They don't.
Some of them are a little bit old. You know what I mean? Like, times have changed.
Yeah.
I mean, if even transferring money, I mean, we could transfer money on a phone in 10 seconds. Meanwhile, I go to a bank or a brokerage firm, it could take 2 days.
Yeah.
It got to be a better way.
Yeah. It's hard to understand that.
Yeah, right?
Yeah. So Tony, you do spreads, right? I thought you do a lot of undefined risk strategies, but you do both actually.
I do. Now I'm a partner in Tastyworks, so we own a brokerage firm. But so let me explain it to you from the brokerage side for a moment. When you say undefined risk, if you're making a spread, and I love spreads, and I said it from the beginning in our interview, like the simplest trade is not necessarily the best trade. It usually has the lowest probability of success. A spread will have a higher probability of success. So if a brokerage firm on a spread is here, if you buy an option for $2, it's $200. They hold $200 in away. They take that out of your account. They hold it. You can't use it anymore. That's your risk. There's no risk to the brokerage firm because you bought the option at $2. We took $200. We put it on the side. And if that option or stock goes up or down, your account goes up or down. No risk to the brokerage firm because I took that $200 and I'm keeping it on the side. You can't use it anymore. Brokerage firm has an undefined risk trade. They take $1,000 and they put it on the side. That's your risk, $1,000. You can bet a lot of money. If I'm a brokerage firm and I'm taking $1,000 and I'm putting that aside, it's still your money. I'm putting it aside. You can't use it anymore. That's your risk, $1,000. I'm not going to pay $1 in commissions. That's what I'm going to collect as a brokerage firm. $1.
Uh-huh.
I'm not going to take any risk for $1. Like it's $1. I mean, when you make a trade, it's $1. So I'm not taking unlimited risk for $1. You know what I mean?
Yeah.
So if I hold $1,000, your risk is $1,000 or less.
Oh, yeah.
Does that make sense?
Yeah, no, I see. Yeah. Yeah.
Now, if I was charging you $500 commission to make a trade, then I take less money out of your account. You know what I mean? Because then I got margin. You know what I mean? I can make some money.
Yeah. That has changed for the brokers, right? A lot of brokers are doing like the commission fees went down a lot, man. And
you can go to Robinhood or someplace else and get free commissions.
Get free,
it's
a bad service, right? It's a bad service there, but
well, I mean, you get what you pay for.
Exactly.
At $1, I think we're about as low as we're going to go. You know what I mean?
Yeah.
We have a $10 cap. So like at Tastyworks, you can trade 100 contracts. It's $10 in commission.
Yeah.
So I mean, like $10. $10. That's your commission for that trade. So we have a cap. So commissions are basically close to zero. Now you got to factor in customer service. You got to factor in security of your money, how fast you can get it, how fast you're going to get it back. I mean, say what you want about the US, nobody's ever defaulted on your money. So if you put money in, you have a guarantee to get it out. That has some value.
Yeah, that's true, Tony. And well, Tony, I won't hold you for longer, man. I know you're gonna have dinner, or you had dinner already or no?
I did have dinner. It's about 7:45 here. I ate dinner. I got 5 kids. One of them from 12 to 32.
Whoa, 5, man. Yeah. Well, you need to charge a lot of commissions there. Well,
we need to keep growing the business, man. That's really what it comes down to, for sure. But yes, I've had dinner. My night is pretty much ending. My day starts at 5:30 in the morning. So every day for the last 40 some odd years, I wake up at 5:30 and maybe do a little bit of a workout if I can. It's not as long as it used to be when I was younger, when I played basketball every day, but a little bit of a workout, and then I get ready for work, man.
No, you're looking great, man. You're looking better than Tom, man. Tom is a little overweight, I think.
Yeah, but he's lost a lot of weight. He looks good, man. He looks good. He's gotten much better.
All right. Yeah, I hope we can do chat again some other time, Tony. You can teach us a lot. You gave a big class today for my viewers, man. I thank you so much for that.
I'm always available, man. If you give you what I can, and then you go do your own thing. Listen, I don't have all the answers. You might like what I say. Maybe you do the same thing. You don't like what I say, do the complete opposite. Because one of us has to be right. That's the best thing. You know what I mean?
And each trader trades his own way, right? Each person is different from the other.
Hey, you like what you don't like what I'm saying? Do the complete opposite. You'll be successful. If that's your belief. So to me, it doesn't matter.
No, it's fantastic, Tony. Thanks a lot for sharing your experience here with us. And maybe we can do it again some other time.
Anytime you want, man. You got my contact. I'd love to speak to you.
All right. Thanks, Tony. Have a great night. And hope the markets keep going up tomorrow, right?
Thank you, man. Thank you. And I'd love to visit your country in the very near future. I mean,
you'll be welcome, man. You'll be welcome here. Here is heat and hot and sun every day, man. There's no winter here like in Chicago, man.
Well, I was telling
no windy days.
My wife came there during 2000 and Mardi Gras, and I would love to do that myself. I've never done it, so maybe someday.
We'll be happy to have you here, Tony.
We'll have dinner. We'll break bread.
Right.
We'll have a cachaça together.
You have what? Cachaça.
Cachaça. Sorry.
Cachaça,
Yes.
that's fantastic. Caipirinha, it's fantastic, man.
And capiina. Yes,
Yeah,
absolutely.
It's fantastic. Thanks a lot, friend. Have a great
Thank you, my
night.
friend. Yep.
Bye-bye.
Peace. Yep. You too.